plenary session about defining the future of financial innovation. It's a discussion with Stéphane Boujnah, Chairman and CEO of Euronext, Nicolas Dufourcq, Chief Executive Officer of BPI France, Jingdong Hua, Vice President and Treasurer of the World Bank, Johannes Huth, Member and Head of KKR EMEA, and Jean-Luc Robert, Chairman and CEO of Kiriba, in a discussion moderated by Rob Cox, who's the global editor of Reuters Breaking Views. Let's give them a warm round of applause. Let's welcome them to the stage.
Good morning. Good morning. So I guess everyone should know how to grab a mic here, like your rap stars. Otherwise, no one will hear you. So good morning, everybody. You've had a couple of pretty interesting conversations already about the real economy, about sustainable finance. Now, in this session, we're going to discuss the future of financial innovation. And the future of financial innovation probably requires a little bit of thinking about the past. As we were discussing before in our prep, financial innovation 10 years ago was something of a dirty word, or two dirty words together. People thought about financial innovation after the great financial crisis were things like synthetic CDOs or credit default swaps, some of the things that we associate with the decline of the banking industry back then. I think we're talking about different stuff now. I hope we aren't going to be talking about things that bring the world down from prosperity, but rather bring more stable capital markets, create more economic opportunities, greater efficiency, and potentially bring those a billion or so people who aren't even in the financial system into the financial system. So before I quickly introduce this amazing group of panelists that I have, a couple of you have actually noticed that we are a bunch of guys, dudes up on stage, and that is true. I apologize for that on behalf of Europlus, but I've been told that there will be no more manels next year, all guy panels, which I think is great. But thankfully, we have a really great and diverse group of people with great diverse backgrounds here on stage. We have private equity, so people representing investors. We have startups here. We have government, and to some degree of development banks, and we have multilateral institutions. So I'll quickly introduce folks. All the way to my left is Jean-Luc Robert, who is the chairman and CEO of Kiriba, which is a fintech startup, although not exactly new. I mean, you've been around for a few years. And then I have Stéphane Boujnah to the next left, who is the chairman and CEO of Euronext, which is Europe's leading stock market company, not only the French bourse, but most recently the Norwegian stock market, which you were able to nab from the hands of NASDAQ. Congratulations. I have Jingdong Hua, who is the vice president and treasurer of the World Bank, who is very hard to keep up with. When we spoke before for this panel, you were in Tbilisi, Georgia, and I think you just came in from a flooded Washington, D.C. this morning. Thank you very much. Nicolas Dufourcq is the chief executive officer of BPI France, which is, I think of it sort of like a development bank, but more than that here in France. But we'll get into that in a second. And then Johannes Huth, who is a member and head of KKR EMEA. KKR is one of the leading and most prestigious private equity firms in the world. So, gentlemen, thank you very much. Let's talk a little bit. When we talk about financial innovation in the context of this conversation, we are not talking about necessarily the instruments that are going to take down the world economy. I know that for a fact. But maybe we could, each of you, kind of explain, when you think about financial innovation, what specifically does it mean to you, and what are you doing? You know, how is what you're doing kind of helping to innovate financially? I'll start with you, Jean-Luc.
Thank you. So we, as a fintech, I think we are at the heart of financial innovation, because technology is a big game changer today. It makes it possible, things which were not possible yesterday. When we speak about cryptocurrencies, blockchain, or real time, I think today is a reality. and to speed up the financial innovation. And we work a lot for private equity with banks, with asset managers in order to keep them up to speed, because we're much faster in bringing things to market. We're much faster in developing and in a very secure way. So I think we see an acceleration of that. And I think financial innovation is going to accelerate. I mean, when we go on, when we are speaking going to China, I mean, China today is in the 22nd century by comparison with Europe. So I think we see a tremendous acceleration on the way that people use technology in order to be able to innovate.
Right. And Stéphane, I kind of think of the stock exchange as one of the OG, the original kind of financial innovators. But of course, you've had to innovate as companies have come along, tried to disrupt it, or the exchange of equities. I mean, how do you see your role? I mean, it's kind of a crucial one as an operator of stock exchanges.
Well, we have a core business which is financing innovation, because when you embark into risky projects or long-term projects or projects with no visibility on cash flows, the only way to finance growth is to raise equity, own funds. And but we also are in the business of innovative finance. And I would argue that the main frontier for the coming years is to be smart and creative, to get ready for let's call it the Back to the Future Day. And the Back to the Future Day is a day of normalized interest rates. I mean, a significant part of the world economy is getting junky of the current level of interest rates. The governments are starting in Western countries to get money when they borrow money, and that's not sustainable. And the real frontier for innovation is how to find ways for operators, for players, to go back to a world where they can have sustainable models, revenue models, profitability models, where when you need, as my father who left school at 13 says, when you need to buy the shop, you find a partner, and when you need to buy merchandise, you go to the bank. Now, how do we get back to a world which is unavoidable on the long term, where financing of risk and long term will be done with equity? How do we re-equitize the economy? That's where is the new territory for innovation.
I want to return to that in a second, but we'll get to that, which is, this incredible amount of money that's awash in the world has obviously made it much easier not to ever go public, and you're perhaps an example of that. But I want to turn back to that second. But Jingdong, how do you see, I mean, financial innovation from your perspective as as the World Bank, a multilateral institution that's out there trying to support development particularly in the undeveloped world? Where does innovation come into this?
Thank you, Rob. Let me thank Europlace for your invitation. I spoke here last year when I was at ISC. I was amazed that all panels were in English. That's already an innovation for Paris, for France. That's tremendous. Look, from my angle as the new treasurer of the World Bank, financial innovation really means finding new ways to connect global savings to the much needed development finance. We talk about climate change, we talk about financing SDGs, which needs trillions of dollars every year. And the world is not for lack of savings, but it's how to channel those savings to much needed development finance in the 100 developing countries, more than 100 developing countries in the world. I think the World Bank certainly has done its fair share. Take green bond, for example. I think the World Bank issued the world's first green bond in 2008. It's a small Swedish krona, couple of $100 million. And now this year, green bond market is going to be about $200 billion, over $200 billion. And the World Bank itself has issued over 150 green bonds, $13 billion. That's one side of innovation. It's really to connect global saving through thematic advocacy, through transparency to development finance. The second is really about fintech, how new technology could bring efficiency, dramatic reduction in cost into the world finance. And we were also very happy the World Bank issued the world's first blockchain bond last year in Australian dollars. Hopefully, through this new method of connecting global savings, I think we'll be able to introduce new ways. At the end of the day, innovation should not be for the innovation's sake. It really has to be used to solve problems that couldn't be solved before. Here, I want to briefly mention, it's a pity that we have the untimely demise of Bob Collamer of Safaricom, through which Kenya became the global innovator in through M-Pesa, really leapfrogged the world in terms of introducing financial inclusion, and maybe we can expand a little bit in the next round. But let me stop here.
Okay, thank you. Nico, I mean, from BPI France, what is your perspective on what is your role in trying to foster financial innovation?
Basically, our role is to support the ecosystem. We are not absolutely top-down actors. So we believe that the actors from the ecosystem know. In France, there are approximately 750 fintechs. We think they know where to go, what to do, how to be complementary to what the big actors are doing. So we finance them. We have injected in the French fintech ecosystem approximately 400 million euros in the past 8 years. Half of it is debt, half of it is equity. And we are funding, I would say, massively all the French GPs which are specializing in fintech. The last big round being Blackfin. Now, what we think is that those startups will help the big actors to really embark in an open innovation strategy. We think that those actors should more and more think in terms of make or buy, and probably when they have 100 projects, decide to buy 80% of them and only do 20% inside in their own IT departments. And therefore, they will need a massive inflow of innovation coming from startups. This is what we do as a bank, because we're a big bank, and I have decided to do that. So basically, BPI France thinks of itself as a fintech with a subsidiary which is physical. And therefore, all our new projects are basically subcontracted to startups. I'll give you an example. For financial inclusion for the very, very small enterprises in France, we have launched a loan of 10,000 euros without any guarantees. This loan will be distributed by a fintech, which is United. And we took a little bit of shares of United. We have 15% of the capital of United. This is totally strategic for us. It can be hundreds of thousands of new customers, but it will not be the IT system of BPI France. It will be a startup. It will be United. And guess what? The consequence is that we will be on the market in 2 months. Otherwise, we would have waited probably for 2 years. So this is the way we think. We are very happy to see the snowballing of the French ecosystem, honestly. So the number of significant rounds this year has massively increased. You have rounds of 60, 70 million euros. So, if you put your ears on the rails, you can hear the fintech French unicorns coming.
Thank you. Johannes, I mean, KKR, when I think of Henry Kravis and George Roberts, in a sense, they were they were real financial innovators when they started the business, and you were one of the early pioneers there too. I mean, how do you guys now look at for the next, KKR when you're looking around for investor companies?
So look, I think the way Jingdao put it is quite good. It's really how do we connect savings with investment opportunities. And we have a few issues today that people that have to supply pensions, private pensions, largely cannot make the returns that they need to effectively have an equilibrium. So today they're drawing down on funds because the rate environment is depressed. So they're looking for solutions, and that's something that we're trying to provide to them so that they get significant returns. And how do we do that? We do that by providing capital to people who need equity at a higher risk. And after the crisis, we went into, for us, a new business, which is when we found out that a lot of banks didn't want to do more risky loans. That's the business that we went into to provide that capital, generate higher returns for our investors. So I think the innovation that we're driving is really driven by what do savers or pension fund managers look for in terms of returns, and then where can we generate those returns in areas where maybe other institutions aren't active.
I want to get a little more granular here with some things. So I'll start with you, Stefan. I mean, when you look at the equity markets, is an interesting point. You brought up about the normalization, should it happen someday, of interest rates in Europe and elsewhere, would be a return to would really help foster equitization. I mean, how are you dealing with this environment where people like KKR or the World Bank or BPI France have got liquidity that they're putting out and keeping companies are staying private for longer, not going public? How do you deal with that, quote unquote innovation, if you will?
No, there is a fragmentation of the path from being private to being public. In the old good days, you were seeded, finance with some initial investors. At some point in time, more risky money was needed, and the initial investors were in need of liquidity to rotate their investments. And then the solution was the public markets. Because of the sophistication of the private equity industry, because of the flow of cheap debt available, a new bus stop has been created, sometimes two new bus stops between being private and being public, which are the private equity bus stops. And that's great. Private equity guys are our partners because the only ultimate eventual liquidity is the public market or the consolidation with an industrial player eventually. And also private equity guys are in the business of developing companies, but for a limited period of time, because their core business is to provide return through yield and capital gains. Capital gains is a fundamental part of their business model. So this is very different from public markets, which have infinite prospects conceptually of growth. So we need both. I believe that in the recent years, the multiples paid by private equity and the lower demands in terms of due diligence has created an environment where everyone is competing for high valuation deals that in a normalized interest rates environment would be different. But that's life. My point is that equity markets, exchanges, public markets need to be ready to that change of wind. But there is something much more fundamental that needs to be protected because it is precious. We operate markets in Dublin, Oslo, as you mentioned, in many places in Europe. But there is something fundamental in public markets. The Brits use public company to define a company which is listed. In French, public company means a company which is state-owned. When a company is public, everyone can get in and can get out. Everyone can catch a share of the project. When there is too much privatized equity, it's not the same society. It's a world of happy few. It's happy few have the information and invest directly. All the others go to mutualized funds, go to intermediation. They don't have any more direct ownership of companies. So there is something valuable in having people connected to public market. That's why retail investment is so important. That's why financial inclusion through fintech, through all sorts of apps that allow people to connect directly to companies is great. Because if we are not careful, we will get to a world which will be completely segregated. I'm an employee, I buy mutual funds, or I have a sort of mutualized pension system. I'm wealthy. I know with the private equity world, or I have a private wealth manager who knows that, and private wealth is reaching directly to projects. If this one system wins, it's bad.
In a sense, you're talking about the danger is that you have the democratization of finance is at risk if we go into these sort of, I don't know, you have first, second, and third class investment opportunities.
There was a world in the history of the European industrial revolutions where every household who had some surplus was owning shares directly. So they had some connection with railways, with steel, with banks, etc. Today, it's much more artificial. I believe that one of the reasons why the divide between finance and society is growing is that most people know the company they work for, the companies their brother-in-law works for, but through their private investment, they don't have any connection anymore with the rest of the economy, which they used to have when they were directly involved. And that's where the political problem starts.
Nicola, what did you want to add to this?
I fully agree with Stéphane. It's a big democratic question, and one of the consequences is that we have, as BPI, decided, as far as our portfolio is concerned, to open it to people. Therefore, we have a big fund of fund, probably the biggest fund of fund in Europe, with an underlying portfolio of 4,000 companies. So what we will do is that we will propose to the French people to buy tickets of that fund of fund. So we will sell on a secondary basis tranches of that fund of fund to the mass market, to the retail, with limited tickets, of course, because it's not guaranteed capital. I mean, it's private equity. But the idea is to democratize private equity. Private equity should not remain for the happy few. I totally agree with that. And we can do it. You know, when you buy, when you're a household and you buy one ticket or two tickets of a portfolio of 4,000 French companies, you buy the French economy and you buy the French private equity market. And you can do it.
Right. So, Johannes, I mean, why don't you take that?
So look, I mean, I think it's not private equity that doesn't want access to individual investors. We'd be delighted to sell our products to individual investors. I can guarantee you that. So far, the regulator hasn't allowed us to do that. So we have now the largest BDC, Business Development Corporation in the US, which is a way to give individual investors access to our products. But there's still a number of regulatory hurdles on that. And the more capital we can get, the better it is for us. So we'd be very, very pleased to have more access there. It's really a regulatory question today.
Of course, you are also a public company. So in a sense, I suppose one could still buy some access to the to KKR in that respect.
You can buy our shares anytime.
Anything to get a slice of Henry's fees. So yeah, Jingdo, how do you view this from the World Bank's perspective? Because you're still talking. The people that World Bank is trying to serve, they aren't really thinking about, do I get access to private equity funds, or they're thinking about, do I get access to finance in many cases?
Yeah, I think what we do as a World Bank group, as that includes IBRD, which I work for, and ISC, which I used to work for, what we'd like to do is really to risk transform global savings, right? And this is where there is a spectrum between risk-return liquidity, which can accommodate from private equity to public markets, right? We need all kinds of markets because for the initial capital formation of a private sector firm in a developing country where fixed income guys cannot go, you need the private equity side, right? So what I have seen from the World Bank is that leveraging a small paid-in capital by our shareholders, about $16.5 billion, the World Bank has issued over $900 billion bonds. We sort of connected global saving, which otherwise would themselves not go to an emerging market or developing country infrastructure financing, and yet through this public market, because we list our bonds on stock exchanges. Actually, we did the SDG with Euronext, right? So there is a risk transformation, there is a liquidity transformation role that we play. But what I would argue is that the appetite from the investment side is so wide that the demand from private equity to public market, I think we have funding gap in every space there is, at least in the developing countries.
Got it. Now, Jean-Luc, you're the kind of guy that everyone here wants to invest in or have listed on their exchange. How do you view it? I mean, you're kind of you've done a Series E? F?
Yeah, we did a recap with a private equity.
Right.
Bridgepoint in Paris in the US. And I think the private equity and the public market are very complementary. What we saw at Kiriba was basically that if you go public, I mean, you have a risk. 70% of the company who goes public are quoting below their market introduction price. So you need to have a cadence to solidify the company. And we saw that for us, it was a good time to go with a private equity. We took a serious look of being listed, even with Euronext and a dual listing between the US and Paris. I think it was a good timing. But we decided to go with private equity in order to solidify the company. So which means this year we'll be doing $160 million in revenue. We want to go to the stage of 4 years of $500 million in revenue, and then potentially go public in much more solidified company with a better management, with a more solidified quarters, with a better cadence for closing the quarter. So it's all about timing. So we were lucky, we had BPI as an investor, and we were lucky that none of our investors were pushing us to go public. So we had that luck because most of the startups go public because their VCs investors want an exit. And we were lucky not to have that, and therefore we had the choice, either to stay as we are and to continue raising funding to go public, or to have a more stable and a more vision over 5 years with a private equity. But it doesn't mean we won't go public. I mean, it means that it's a stage in the company, which was, I think, the right thing to do for us.
Well, then Stéphane, you're strategically seated next to him so you can get that business and take it public.
Yeah, and Stéphane is a Kiriba client, like BPI as well.
Well, let me turn a bit to Paris. I mean, we are here after all, and this is Europlus. I mean, where is Paris as a sort of financial center? What role does it play when we think about financial innovation, not just for France, but globally? I mean, how do each of you see it? And I'm going to start with you, Johannes, because you actually moved to Paris, left London, and you obviously see great things in being in this financial center besides the cheese and the wine.
Cheese and the wine help, especially the wine. Look, we took a view that we think where we want to put capital in Europe is driven very much to some degree by what the governments are doing. And when I look at the reforms that this current government is undertaking in France, we are convinced that those will have positive effects in the future. And I often make the parallel to what happened in Germany in the beginning of the 2000s when Schröder reforms were introduced. I myself was skeptical that these reforms were going far enough, but in the end they had an extremely positive impact on Germany for the following 15 years. And so this is what we are investing behind, those following 15 years. And so we think making investments in some larger French companies will be positive for us given the sort of outlook that we have on the economy. That's why I moved here. I now hired a French partner to lead our effort in Paris, and we're enlarging our offices, and so we're making a big commitment to the marketplace because we very much believe in it.
Let me ask you, you're based in San Diego, so why not Paris?
Yeah, so
besides the surfing.
Yes, in addition to the surfing. So we were born in France, so we still have a very strong hold in France. We're about 300 people. And all the research and development are in France because of the French ecosystem of engineering school, and which is very strong. And there is a paradox that if you want to be the leader in the world as a software company, you need to win the US. I mean, you need to win the US market and you be the leader in the US. So that was our goal. So we decided to attack and to invest massively in the US market. Today we are the leader globally. We are the leader in the US, leader in Europe, and we start having very strong operation in Japan and China. But I moved to San Diego basically because my wife is from San Diego. So a happy wife, happy life. So I think that's the way to go.
That's a good answer.
It's a good compromise because the Bay Area and Seattle are very stuck. And I think San Diego now is probably the next stop.
Yeah, right. Jingdong, how do you see? I mean, from your perspective, the World Bank, you could be anywhere. You could do business in any financial center. What is it about Paris that you think is unique or attractive?
Well, the World Bank Treasury's European hub is in Paris. So we actually have a team here overseeing one of our 170 billion global fixed income portfolio. So certainly Paris as a financial center, we have been taking advantage of the liquidity. But I want to give a shout out to continental European-based investors. Given the extremely low interest rate, how can we work together to introduce more investment opportunities in emerging markets, where through our bond issuances, not only in dollar, euro, Swiss franc, but also more and more in emerging market currencies to connect global saving in new methods. Another thing I wanted to say is that recently we have introduced a new bond format called capital risk bond, catastrophe bond, right? Where we can insure earthquake, weather, natural disaster, commodity through the fixed income market, where these bonds are uncorrelated with the normal fixed income that then introduces additional investment choices. And I think I very much look forward to a conversation with Paris-based institutional investors. How can we then use this as additional avenue of financing development in our client countries?
Stefan, I mean, you just, yeah, go ahead.
No, I think things are extremely clear on three fronts. The first one is regulation. I mean, there is a fundamental, deep and profound commitment for the past 3 years or so. The whole thing started already in 15-16 and has been taken to the next level since 2017. Clearly, the commitment in terms of tax, in terms of labor law, in terms of competitiveness and attractiveness is there and is going to stay. And that's a fundamental change. It's a fundamental and profound change which is going to massively transform the conditions of production in this country. And the rest of the world is looking at it. The rest, there might be some adjustment about pace and rhythm of delivering things. It's never enough. No, it's never completely satisfactory. But guess what? We are not alone in this panel or in this room. And there is a society at large around us that has different expectations, different preferences. And the role of the elected leaders is to find the right compromise between what they feel and what they want and what we feel and what we want. So, but this is there, it's going to stay. The second thing is that, you know, we run the exchanges of many places in Europe, including Dublin, Amsterdam, and Paris, and post-Brexit, the substance that is leaving from London is leaving to, yes, Frankfurt and Luxembourg, but also to Paris, Amsterdam, and Dublin. And we see that the reality after now 3 years of noise is that there is a sort of de facto specialization of these cities, because there are things you can do only in Paris. If you need access to a deep talent pool, and if you want to be connected to a real close network of issuers and large global companies, there are more here than in other places. All the other cities have a different set of this, but this is the reality. The final point, which is in my view the most important one and not properly commented enough, is that for the finance industry, Brexit has already happened. There is no way back. There is, what we observe in the business of Euronext is that the players who had made plans to migrate on the 29th of March have implemented their plans. The sense of humor of a real company is not the same as the one in Westminster. I mean, you cannot say, well, you know, I changed my mind, it will be 12th of April. No, I'll change my plans, it will be the 31st of October. In most financial institutions that want to make money within the European Union, they have implemented their plans since April. Brexit has taken place for the financial industry, and there is no way back. So the world is adjusting to this new reality, and that's why Paris, with Dublin, with Amsterdam, is one of the most attractive spots to get the substance. If you want to make money in London and milk the blue chip companies in the European Union, the 450 million of household of people with a good standard of living, the euro currency, you need somehow to be regulated within the European Union. And this trend, this momentum has happened.
I mean, Nicola, I mean, your institution is kind of an interesting hybrid. You're half owned by the Caisse de Dépôt, right, and then half by the state. What is your role? I mean, how do you see your role as chief executive of BPI France in playing, you know, in fostering France and Paris as a financial center?
Let's start with the, I would call it overwhelming ambition, which is to make of France the leader in tech in Europe. We want to be the leader in tech in Europe. And that's the reason why we have progressively in the past, I would say 6 to 7 years, built a complete infrastructure of innovation financing, innovation supporting, innovation coaching, venture capital, and so forth, which is now proving to be quite efficient. I'll give you one figure that maybe nobody has in mind. In 40% of the deals in Europe today, you have French capital. The ecosystem of venture capital in France is made of 120 GPs. 120, not 10, 120. We finance 90 of them. We inject in funds of funds every year 500 to 600 million euros in those funds. And this is constantly progressing. So for those who notably would come from the North American geography here in the room, LPs, I would tell them, finance that ecosystem. That ecosystem is mostly financed by Europe, by France, by the insurance companies, by the banks, by the European investment funds and so forth, not so much by the US pension funds, because that reality, which is that France is a massive Israel, is not known. It will be revealed progressively. So our role in BPI is to make that infrastructure resilient and transform the country and the continent going forward.
Well, let me just push back a little on that. Or add a question, which is one of the views outside of France, of course, is that the state gets involved in industry a little too much. So people look at the FCA Renault transaction and say, oh, what was the government doing, blowing that one up? For instance, I mean, that's a far different example. But, you know, this idea that that there's also a cost that comes as associated with the state being involved in your industry, your business. I mean, I would say that's one of the perceived negatives about that structure. How would you respond to that?
I can, of course, comment on that. On the field of innovation, nobody would say that of the chief scientist of Israel. Nobody would say that of the Innovation Agency of Finland. And we're just doing the same. And even as far as proportions are concerned, a little bit less than Finland and Israel. So that's just not a question. Then there is another one, which is shareholdings in massive listed companies. And here I would like to say something, boiling back to some of the comments which were made before on the public markets. We need a new asset class, which is private equity applied to public stocks. You know, we need active management of public stocks with board memberships. We have to recognize that need. You know, passive management, algorithmic management, mathematic management of public markets is not enough. And this is precisely why you have so many activist funds. But you also can imagine an asset class which would be a sort of constructive activism class. This is what we do. We have 12 billion euros of listed portfolio. I'm the chairman of ST Microelectronics, for example. And we do it with that philosophy of active management, influence on the management, knowledge of the factories and so forth, because this produces good returns. Now, in FCA Renault, you could argue that the representative of the state, which was not my company, but it was the French Treasury, was maybe right to say he didn't want that deal as an active manager of Renault. You could say that. It was not the political injunction.
He does say that.
Yeah, okay. So, no, but it was rational. It was not a political injunction because it was the Italians and so forth. It's just that maybe they thought that the deal was unbalanced. And maybe the deal was unbalanced.
Now, just a very comment to build up on what Nicolas said. We are living in a very different world from the world where we spend, most of us, a significant part of our career. And we are living in a world where around us, governments and states are back in business. So at the European level, we need to find ways to address this new situation. And when we look at what has been done in the past, I mean, everyone is doing government bashing, but without resisting that bashing, Airbus will not be around, and the world will be dominated by Boeing. So Airbus was created by a vision. Today, some people in Germany, in France, in Poland, in Spain, in Sweden are having a new vision, a new dream on batteries. We see how it goes. But without this vision coming from elected leaders, there wouldn't be even a try. So we shouldn't be afraid of trying. We should be afraid of not trying. And that's why we need that global long-term vision that is built in within governments.
All right, good point. One last question, maybe a quick lightning round here. Libra, which is the crypto thingy currency that Facebook is coming out with. A lot of interesting views about this. When we think about the context of financial innovation, is it good or is it bad? Is it benefiting the economy? What are your views briefly on Libra, or you can take another view on cryptocurrency? Start with you, Johannes. Are you paying yourselves in Libra coin next year at KKR?
No, So it's not so far. We really haven't made any great investment in the cryptocurrency space so far.
So we supported Ledger, which is a beautiful French company. What can I say on Libra? I think there's going to be a big competition between stable coins. There's this one, there is the JP Morgan one, there are many banks will launch stable coins. Maybe at some point, it's not an announcement. BPI France will launch a stable coin. We will see. I mean, at the end of the day, there's going to be a market for that, and we will see what the consumers really want.
I can't say that I know enough about Libra to give an informed opinion. What I would say is that from the World Bank's angle on capital market, if we were to have crypto version of sovereign currencies, that could turn AI blockchain-enabled bond issuance with much more efficiency and lower cost that allow us to connect not only with the traditional institutional investors, but global retail investors. The millennials who have money to spend. Just imagine if the World Bank can issue a global retail bond through a blockchain-enabled, digitally settled sovereign currencies in multiple currencies. We just have to reach 100 million global middle class who are passionate about SDGs, each giving us $1,000 equivalent in whichever currency. That's $100 billion that we can, in addition to connect for development finance. I think so. FinTech brings tremendous potential to accelerate financial inclusion because more than 1 billion adults still don't have any access to financial services that impedes economic development in developing countries. So FinTech should be the next frontier in terms of innovation to solve this problem.
And Stefan, we're going to see Euronext now is quoting everything in Libra?
No. I'm skeptical, to use British English language, for two reasons. The first one is that all currencies are assets. All assets are not currencies. So there are some specific features associated to a currency in terms of universal conversion that do not exist with this type of very massively developed asset. The second thing is that the currency is an attribute of sovereignty. The guy who runs monetary policy in all countries is someone who is a man or a lady appointed by elected political leaders within a framework of independence of thinking, blah, blah, blah. But ultimately, it's an attribute of sovereignty. I don't like the idea that one day a big currency, a powerful currency, will be determined or led by someone who has been selected by Egon Zehnder, Spencer Stuart, or Russell Reynolds. We need to have a clear vision of what a currency is because it has some features of a technology platform, but it has much more deeper components. Monetary policy is monetary, but it's policy. And unless you miss that point and the link with economics, you are making a big misunderstandings.
So you didn't want Mark Zuckerberg to run the ECB. I guess that was, he wasn't on the list as far as I can tell.
That's a short version, yeah?
Yeah. Jean-Luc, final word for you.
Yeah, so Kyriba is very strong in the liquidity space. So we manage the liquidity for the corporate world. And of course, payments is essential. And payments is probably the world which is going to change the most in the upcoming 5 years. We're just at the beginning of a huge disruption. It's going to be massive. And of course, when we see Facebook coming with Libra, also we don't know exactly what's going on and how it's going to happen. But blockchain, artificial intelligence, cryptocurrencies is the world of tomorrow. Whether you like it or not, it's going to happen. It's going to be disruptive. It's going to be massive. And it's going to be enabled by the fintech world. We know at Kyriba we spend a lot of time on these matters because it's going to happen, not in 10 years, but in 3 or 4 years.
Thank you very much. Please thank my panel with robust applause, and we'll be on to the next one. Thank you.
Thank you. Thank you for a very exciting discussion.